Hey everybody, it's Pete. Good morning. Hope you had a nice weekend. If you could just do me a quick favor, let me know that the audio visual is good, and we will get started right away, respecting everybody's time, making sure we get enough time to discuss a bunch of stuff and create a game plan for heading into Monday morning. We are also going to talk about these two books. I'll flash them in here really quick. Every day I like to try a little bit of education so that we can expand what we're watching, as well as talk about some new ideas for the weekend. Our prayers go out to everybody in New Orleans right now. I'm actually in South Florida. We did not get any of it, but I've experienced a few hurricanes down here, and it's not something you'd wish on anybody under any circumstances. So our prayers go out to everybody in New Orleans right now. I just have to do one thing with something that we have to make sure we put out there every day. So stick around. Be back in just 1 second. Okay, so obviously with everything we do here, it is all educational purposes. You have to make the final decision on your own. It's my mission to bring you as much good information as possible to help you make smarter decisions and ultimately learn how to follow the smart money. So I just want to say hello to a few people here today. John Bates, of course, good morning. Good morning, pal. How's it going? Catherine, when are we going to see you on the other side in the boot camp? Come on. Let's see. Rod, how are you today? Hope you had a good weekend. Marion, how are you today? Good afternoon from Europe. That's right. About 5 hours ahead of us, I think, something like that. John Weinberg, how's it going, pal? Let's see. Guy, good morning. Guy dipped his toes into a snapback trade in Penn on Friday. I'd like to see that. Let's see. Ganka Kaya, good morning. Good morning. All right. Awesome. Let's see. Joseph Speck, I'll say that's how you say that. Good morning, Hank. How's it going, pal? And David LeBate, always good to see you here. Awesome to see you today. We actually have an announcement, something new today. If you happen to be following us on a regular basis, first of all, I'd really appreciate it if you did. And especially if I provide value, it would mean the world to me if you just click down and subscribe and hit that alert button. Smash the like button too, because that'll let me know that you enjoy this type of content, because the more we do, the more you like, the more I'll put out, and it works out good for everybody. What I want to do is I just want to touch briefly. I'm just going to share the screen for 1 second. We're going to be launching this within the next 2 or 3 days. We want to try and get it launched before the holiday weekend. We're going to be launching Top Trading Pros private Facebook group. So look for a announcement maybe today as a YouTube short, maybe as an email. I don't know, but look forward to that. We're going to be putting out that this week so we can carry the conversations a little bit further than just what we're doing here today. Okay. All right. Hey, John Pena, how are you today? I'll see you in the community today. Let's see. Tom Drolette, good morning from Massachusetts. My cousins actually live in Massachusetts. They live right near Logan Airport. They've been there, I think, 50 years now. I think they moved from the Bronx up to Massachusetts. And hey, Jason, good morning. Okay. All right. So what we're going to do is we're first going to dive into what we're looking at in the futures. We'll set a little bit of a tone for the market. Then we'll get into the books that I want to talk about today. If you listen to the video that we published last night, I wanted to give a little bit of context for what we were talking about, because the way that Pfizer lined up, if you didn't happen to see the video, I'll just give you a really quick rundown on it. The way that Pfizer lined up prior to the FDA announcement, Pfizer was one of the stronger stocks out there on Wall Street, and it was kind of like a no-brainer buy. We had order flow unfolding on the daily charts, translating into the weekly charts, and it was just a really good push for the better part of a few weeks. But then the FDA announcement came out after that move to the upside and started to roll over, which is why the video that we put out last night was basically looking to sell the news of what happened on Jerome Powell's statement on Friday. Now, I want to clarify it. I want to be clear on this, because the big part of trading, and if you understand, I'm going to actually just pull this into the screen here for a second, just to give everybody kind of like a bird's eye view of what we do kind of behind the scenes. So, you know what, let me actually make this a little bit bigger and go right into the screen. You'll notice over here, this is the biggest thing that I want to talk about. I want to talk about building a bias for your ideas, building a reason to accept risk when the market opens, building a argument for putting your money in harm's way. So I want to make it clear. I don't want the market to go down at all. I mean, it'd be great. I mean, if we put things in context and we look at the picture, we keep doing this with our private community. If you look at this over the last 20 years and the circumstances that we're in right now, this is about as vertical of a price action as you could possibly get. So, we get the question all the time, is this a good time to become a trader? I keep using the terminology, it's a glorious time to be a trader. However, when normal price action unfolds and circumstances unfold, it gets to a point where you are looking to put the pieces together. And everybody for the last couple of weeks was waiting for the statement to come out on Friday. We mentioned that the market internals did not imply that we were scared at all. As a matter of fact, the VIX, the volatility index, was going down while the market was going up, and that was in sync. That was what we were looking to see. That would confirm that nobody was afraid. So we had a really good bullish week last week, and then the news came out, and we had a vicious day on Friday of bullish moves to the upside. Even the stock that we talked about earlier on Thursday, AMD actually finally exploded to the upside as well. So again, putting these pieces together. However, when you learn to put the pieces together, you try and not get caught playing musical chairs, and you're the last person involved in that news. So like, oh my gosh, the news came out, now let's all get long. But you have to factor into it the fact that it's already up for the prior 2 weeks to that announcement coming out, and quite honestly, for the last 18 months. So nothing has changed. We're talking about timing. That's the big thing I want to talk about. The big picture order flow, absolutely, positively, obviously still bullish. What we're looking for is a little bit of profit taking coming off of, now that everybody can breathe a sigh of relief after the Jerome Powell announcement last week. So I just wanted to make sure that I want to treat everybody here as if, again, if you don't know, I had two trading businesses in New York City. My last one, Keystone Trading Group, we had 300 traders. I wanted to make sure that we talk as if you're on my trading floor in the morning, and we have these conversations so you have full context. I am just looking for some profit taking today. I'm not looking for the stock market to crash. I'm not looking for this big move to the downside. I'm just looking for a little bit of that buying pressure to kind of be relieved. Maybe we'll go down for a day or two. And if we don't, this is the key. And remember, if you look at the email I just said, that's my thesis for the day. That's my argument for the day. That's me putting all the pieces together and saying, I think the market's going to find a little bit of profit taking, but there's still plenty of opportunities to be buying. So if you watched last night's video, I showed you the screen of all the stocks that we have in our game plan coming into the day. First, obviously, every day we start out with sector rotation, and the sector rotation was incredibly strong, both on Friday and then over the 5-day period, which was us coming off of those bottoms. If you remember, we've been talking about energy stocks and basic materials now for a few weeks. They worked their way up to the top of the list. How did that translate? Well, I want to give some context. It translated into, and you can only see 30 here. We normally have anywhere from 10 to 18 stocks in that list of stocks that are in play for that particular day. So I give this to our community every night. Every night I run all my algorithms. The next day we come up with sector rotation. Then we dive deeper into those stocks. Then we come up with just a basic list of stocks that meet all the criteria. And then we kind of mold those into the game plan heading into the day. So the addition to the argument of how strong the market was on Friday and after the fact, after the Jerome Powell statement, we went from 15 stocks to 55 in that list. A gigantic, I said staggering number of the amount of stocks that expanded into that list. So I kind of mentioned this last Thursday and Friday where I said, now everybody's leaning on one side of the boat, which in the big picture is good. There's a lot of buying pressure. There's order flow on one side. What we're talking about today is timing. And that's where I actually want to bring this into the screen today, which part of these two books that I want to get across to everybody today. So what we're going to talk about is this. We're going to talk about, I'm going to introduce this, and I kind of coined the phrase saturation play. And what I essentially want you to be visualizing now is that there's typically a cycle that I'm looking for in the market every day when I am reading the tape. Now, everything is not the market is fluid. So we need to make sure that we are, we call it all the time in the community, act like a pro. Act like a pro means you build your argument, but then you pay attention. You build your argument and then you pay attention. So what we're looking for on this screen here, which is, we'll get into these two books in a second, is the framework of what I look for on every single chart that I look at. And we essentially have 3-day cycles that we're looking for. Now, some days the cycles are many, many more days than 3 days. That's not the point. I want to get across. So if we take an example, we take a look at Penn right now, you can see that Penn is a lot more than just 3 days. You can actually see the stock is now into the 6th day of this price action. And that's a good lesson and a good way to understand what we're going to talk about when we look at what's going on here. Okay, what this does is it gives you a framework for what you expect to have happen every day. By a mile, one of the most confusing things, especially for active day traders going into the day, is the market is confusing when the market opens. It's moving too fast. I don't know what to do in that first part of the day. But we can all admit the first 90 minutes of the day especially have the most readable and tradable volatility. It moves the quickest in that direction, okay? Or it moves the quickest, and volume is very consistent because you have all those orders from overnight coming into the day, and you get those good pushes. And, we had a couple of examples. If we take a look at, we'll use American Express actually as an example from last week, and we'll drop down into, let's say, the 15-minute time frame. So you get these kind of moves right out of the gate, so you understand and you can anticipate what you expect to have happen, all based on this. So I just want to get into a little bit of detail. I'm going to bring it up into the screen right now and come back. And if anybody's ever read this book, just let me know. This book, The Tailored Trading Technique, is really the foundation of where I came up with all of this kind of stuff. So the way I talk about it when we talk about it and teach it inside the community. First, I want to say the book was written by a Chicago trader in the 1950s. If I'm not mistaken, it was 1950. I've said 1955 in the past, but you can see how hard I've actually worked the book. Like I bought this book probably in 2000, if I'm not mistaken. And I bought this book in 2000 because I was introduced to it from this book. If you've ever heard of Linda Raschke and Larry Connors, Linda Raschke specifically has taught me a lot. She's really, really smart. She's one of the most popular traders out there, has been for years. She was actually in the Market Wizards books. But what I want to talk about here is actually the title of their book, Short-Term Trading Strategies. We actually get confused sometimes with when we go out on Facebook, YouTube, and we put our butt on the line and we're like, yeah, I think this is happening tomorrow. Like what I did today, where I said, look, I think that we're heading to the point where we're going to see a little bit of sell the news today. And I'm putting my butt out on the line, but that's the context of the price action that I'm looking at. So we need to make sure that we're understanding short-term trading strategies versus investing. We're not talking about investing here, not yet anyway. So the point that I want to make about this book is that when you understand this kind of price action, let me bring that up a little bit more, you actually go into every single day knowing exactly what you're looking for, which kind of makes the market fun, for lack of a better way of putting it. You start to see a buy day, a sell day, a buy day. So the next day would actually end up being a sell day. So you have a buy day, a sell short day. You start to see it over and over and over again, where you now have control over the process. Now, does that mean that it's just like, oh my God, every day one is a buy day two is a sell day 3 you're getting out? No, you still need to understand how to read the tape, and those are the pieces that you put together in the book. Both of these traders are talking about short-term price action, which is really what my specialty is, which is reading the big picture order flow and then reading the tape to time entries into those ideas from one day to the next. And actually, my wife just walked in. I see her PJs. That was kind of funny. So anyway, the point that I want to make is that when you're looking at the market and when you're looking at stocks, and we'll get into the books in a second, it's critical that every single day when you go into the market that you have to have something where you say, this is what I expect to have happen. And I think it's one of the biggest mistakes that, let's call new traders. I don't want to call anybody rookie or amateur or anything like that. Let's just say a new trader who's still learning price action. I'm going to throw this out there, and I really want you to think about it. Remember, every day we talk about putting stuff on your post-it pads. It's really the most critical part of learning how to be a trader. I'm going to challenge you right now. I'm going to challenge you to say, here's what I think is going to happen today because of X, Y, and Z, both in the market and in the stocks that you plan on trading. Now, the most exciting part about this, and probably one of the most interesting aspects of the book, and you can actually see here, I don't know if you could catch that. Let me actually bring it in. Buying on a buying day low violation. So, and you can actually see all the highlights and everything like that. First off, I want to say that beyond a shadow of a doubt, this book is one of the most difficult books you'll ever read. The guy was not a good writer at all. And if you could imagine being good at something and trying to get all that experience out of your head and putting it down on paper, it's not like linear where you might read a book today and be like, okay, there's step one, there's step two. He kind of jumps all over the place, but that's not the point. The point is, once you start to grasp the concept, once you start to have, like I have, and we teach in our community, once you have a framework during the day of, if this happens, I'm doing this. If this happens, I'm doing this. And then I'm expecting this. The market is not confusing anymore. All of a sudden now, regardless of what happens in the market, you know exactly what you're looking for, which is kind of exciting because now think about the implications of this. Now, I know a lot of people are kind of afraid to predict. So let's just put that out there. You should have the guts to say, I know what the heck I'm looking at, and here's what I think is going to happen today. Now, here's where people get scared. And I know that's a strong word, but it's pretty much the only way to word this. And I'm going to leave that up on the screen for a second. And I want you to get out of your comfort zone. Here's the difference between somebody who will reliably make money versus somebody who hopes to make money. Big difference, right? Somebody who reliably makes money, somebody who is moving forward in a way that if there's money out there, I'm going to make it. Now, that doesn't mean you're going to make money every day. You know, I've actually said a few times last week that I found August a pretty difficult month to trade. We had a lot of have and have not. Stocks exploded, stocks imploded, or did nothing. They were kind of all over the place. And even if you look at that list of stocks that we had up there, we really don't have a dominant sector. We're kind of like all over the place. Normally, you can see a bunch of stocks in one sector that are kind of leading the pack. But in this particular case right now, we're kind of all over the place. That's good that there's a bigger picture. But here's the point that I want to get across. When you know what you're looking for, it's easier to see if it's there or if it's not there. That's a big deal. I know that sounds like Yoda or like some, Japanese koan or something like, like that's not what I'm talking. I'm not talking about being Confucius here. When you know what you're looking for, it's easy to tell if it's there or if it's not there. Now think about the implications of that. You did the hard work. You looked at the market, you looked at it through certain eyes, you looked at it this way, and you said, okay, today I'm expecting these stocks to open lower or test yesterday's low. If they test yesterday's low, I'm going to be buying because I'm expecting that low to hold support. That's actually what we're looking at here. So if you look at this picture on this side here where we have a sell day into a buy day, so that means we're essentially looking for a strong stock that has pulled back. And then the next day, if it closes on the low, we're literally going into the day saying, I expect that stock that's strong to open up near yesterday's low, maybe slightly push it yesterday's low. And then I'm looking for buyers who created the order flow in the first place to come back. So if you could kind of visualize what we're talking about, even in the market right now, what we're looking for is maybe the market to have a profit-taking day of maybe one candle like this, maybe even two. And then let's just say, for argument's sake, tomorrow or Wednesday, depending on how it unfolds, then we're looking for this to happen the next day. I know this is a lot for Monday morning, but I'd rather expand your mind and give you some deep stuff to think about. That's only the first thing. So I want you to challenge yourself, write it down right now, and actually do me a favor, because I want to see who's really actively participating. Write down, type in the chat, I accept the challenge. I want to know who's going to have the guts to get out of their comfort zone and say, I'm going to start to be in control of what I see the next day. And here's the subtle place where that matters. When the market opens and you say, this is what I'm expecting, and I'm going to show you an example from Friday. And it was a trade that we took on Friday. All right, Dylan taking the challenge, Guy taking the challenge. I want to show you an example from Friday that members who are in our community right now can verify. We took the trade on Friday, and we're talking about some of the pharma stocks, right? We've been talking about them for a while. So we're talking about UNH, okay? Look at what UNH has done. So you could, if you can visualize the buy day, the sell day, but then following it down and having that structure for the day, we actually looked at UNH on Friday, and here's the price action for the last couple of days. And I'm really going to blow your mind right now, because this is really where it gets exciting, because we're first putting UNH in the context of this longer term bullish move with a lot of the pharma stocks and obviously the stuff that's going on in the world right now in play, and they have been in play, and the FDA announcements are coming out. So now we drop down to the shorter time frame, and this was Friday, but let's actually go over here to another day. So if you could imagine the strong stock pulling back, and this day here traded below the previous day. So now right out of the book, what we're talking about, we're looking for the strong stock to find buyers. If it takes out the previous day's low, slightly take out the previous day's low. So this actually happened, traded from 421 up to 423. So a $2 move. Then we go over here to Friday. It traded below Thursday's low and rallied from 416 and change to this move right here, 419 and change. We actually had the buy stop out at 417. A better follow through. They should have followed through the entire day and rallied up to the highs. But that's not really the point. The point is this. The point is having a structure for what you're looking at. So every day now, I want to challenge you based on, and this is the key, based on how the market closed yesterday, based on how the market traded the last 3 to 5 days. How do I expect that to open the next day? Now, here's the part that's really going to blow your mind. And how's that for selling it, right? By the way, if you just happen to log in, I just want to give everybody a heads up on we're going to be launching a private Facebook group soon. So look for an announcement here very shortly. So here's the thing. Here is, beyond a shadow of a doubt, one of the most exciting parts of this. Close your eyes. Don't close your eyes. Maybe you're driving. Imagine right now that you knew the high or the low of the day. How valuable would that be to you? Just imagine this right now. And again, Linda Raschke and Larry Connors really talk about this. The name of this book was Street Smarts. And to give you an idea of some people will invest in themselves, and some people just want to do trial and error. Neither one is wrong. Neither one's right. But when you invest in yourself, you tend to get the result faster and easier, quite honestly. I bought this book in 1995. In 1995, it was $195. Has paid for itself 1,000 times over. The thing in this book that they explain a little bit better than he did in this book is, and I want you to, again, something else to write down, and you're going to want to watch this video a couple of times because we talk about a few things here. If you can imagine what we're looking at on the screen right now, and a big part of this book, which I don't know if you could see it here, but on the bottom over here, let me actually bring that into the camera. Right. Hold on. Look, I want you to get the full context here. So hold on. So if we look at right over here, buy low made first and then the high made first. So here's the point. I'm going to put that back on the screen because there's another element to the picture that I want you to see, which is this part over here. When you start to add the pieces together and you talk about a buy day, a sell short day, and then you add to the context, because this is a really good question, because you'll be looking at it and then you go into a stock like this, and let's actually put the daily chart on, and you go like this. And you're like, well, it doesn't meet the criteria, Pete. What are you talking about? You're wrong. Linda's wrong. Larry's wrong. That guy, George Douglas Taylor, he's wrong. No, there's another part to the equation, which is how the stock trades off the open. So we're gonna actually finish up this trading lesson on what we're looking at right now. Is you have a buy day and a sell day, but then you add. So you now go into the day saying yesterday closed strong. I'm expecting X to happen after the open. So now we're going to add what that X means is we're essentially now looking for the first push off the open to be the high or low made for that day. So if you can imagine a stock that's going down, so just kind of visualize your favorite stocks, right? Your favorite stock is up over the last couple of months or however long time it happens to be. And now you get a stock that's pulling back. So that same stock that was strong is now pulled back. You are now looking for that. And this is really where trading gets so exciting because you're putting the pieces together. You're now looking for that strong stock to make the low first so that you can be a buyer where people who are not recognizing the long-term order flow, only seeing it going down right now, and they're looking to sell short. Maybe people that have bought it in the past are now panicking out and getting short. But we're sitting there saying, okay, I want to see if the stock pushes down. And that first push down, we see maybe a bullish U-turn. We see well-bid candlesticks. We see some sort of short-term reversal. Maybe if you use stochastics, you see a divergence, which I don't use, or RSI or any of those kind of things. So you start to get this. And I'll just pull this up in a little bit bigger picture so it's easier to see. You start to get the strong stock pulls back. Instead of the first push off the open, in this case here, starts to push higher. You have the opening price, which is here, pushes lower and makes the low of the day first, and then the rest of the day starts to rally. So what are the staggering implications of this? I keep using the word staggering today. I don't know why. The implications of this are that if you happen to be a day trader or if you happen to be a swing trader, so let's take both of those circumstances. If you go into the day saying this strong stock pulled back, I'm looking for this stock to open lower, push down, find buyers, and reestablish the order flow, you're now literally watching these strong stocks that open lower for buying. You're not looking to panic. You're not looking to sell short them. You're looking to hop on board when that smart money gets back into the picture. And here's the big part for a day trader especially. You are now not watching every 5-minute tick go up and down, up and down, up and down, and panicking and your heart going back and forth. You're now just saying, okay, the low got put in early. And now you have two different time frames. As it pushes lower, you could wait for it to get back above the previous day's low. You could wait for it to get back above today's open. You could wait for it to get back above the previous day's close. You have some sort of framework now where if it opens, pushes down, and starts to rally, this is the biggest thing that I know I'm going to get feedback on. But Pete, you're catching a bottom. I'm not catching a bottom. You have to listen to the whole thing. This is where you elevate your trading. You stop being a chart reader and you start to become a trader. A trader is somebody who puts these pieces together. I did not say we're buying it on the way down. I said the first push off the low, again, as you see in the cover of the book, the first push off the low is what we're looking for, where we're looking for the low to be made first. If we get price action where it starts to turn around, that's confirmation, but that's not the entry signal. Well, then we're waiting for, you could wait for yesterday's low. You could wait for yesterday's close. You could wait for today's opening price. You could wait for the first half hour to finish. It doesn't make a difference. You're waiting for, we talk about it all the time. We're waiting for feedback in the market to confirm that reversal, to confirm the price action that we're seeing here. If we see that, then we start to participate. Now, if you're a swing trader, think about the implications of this. The stock starts to push lower and you're already buying a strong stock. So you're buying a strong stock. So you are on, I don't want to use the double negative. You are on the side of the institutions. You are on the side of the smart money because there's already existing order flow. What you're looking to do, and actually, again, in this book, and he talks about how the trend is formed over the last 3 to 5 days, that kind of thing. Think about this. You're never going to look at charts the same way. You won't be able to apply it today. This is the first time you're learning it. It took me a while to actually learn how to use it. Linda Raschke and Larry Connors actually have some sort of short-term 2-day stochastics that they use to try and time these back and forth. What you're essentially doing is you're looking for reversals in the short-term price action. And if you read this Second Market Wizards book, where Linda Raschke was actually interviewed in that book, she essentially said you got to feed the ducks when they're quacking, which essentially means that when she was a floor trader in the PECOS, the Pacific Stock Exchange, essentially the market would rally 2 to 3 days, and then the specialist would need to bring the stock back down and rally again for a couple of days. And that's the rhythm of the market that you're looking for. But here's the thing, and we just talked about Penn, and this is a life-changing thing. It's easy to somebody to say, well, you're not just going to go in and sell short on the third day. And you're 100% right. But that's why we add that last element of the first push off the open to tell us whether or not the 2-day, 3-day move is done. because again, this is getting all the way back to what we started today's call about, which is what my thesis for the day was, for my argument for what the day was, for how the framework for that I'm going into the day. We had a lot of people accept the challenges, which is awesome. And the challenge, if you just logged in, is getting out of your comfort zone. You need to know if it's happening, then you take action. If it doesn't happen, you're like, okay, that thesis didn't unfold. Now just look at the stocks that are. So here's where you separate yourself and you elevate yourself to somebody who's really in control of whether or not you get paid. Assuming, of course, you manage the losses. Okay, we have to assume that you're managing the losses. The other side of the trade is, let's say you game plan. Let's say now you game plan, you go into the day. And again, this is real trading stuff. This is not, hey, Pete, show me a bull flag. That's not trading. That's chart reading. You go into the day with 7 stocks that meet the criteria, just for argument, right? Like just as a thought process, because I want to really set your mind correctly heading into the day. And by the way, I apologize. We have to actually end this call right now because I have to head into our pre-market gameplay meeting with our private community. If you want to learn about that, click the link below in the description. You could learn more of what's included. Here's the point that I want to make, and this is a colossal mistake, and I'm going to get you really excited here because when I finally learned this, it changed everything. Pete, I went into the day, 5 stocks. I had all 7 stocks. I wrote out the game plan exactly like you said, and 5 stocks didn't do anything I expected them to. 2 stocks did exactly what I expected them to. And I'd be like, oh my God, that's awesome. And you'll be like, I don't understand. 5 stocks didn't do what I thought they were going to do. Like, no, but you put your ass on the line. You said, I expect these stocks to do X, Y, and Z. 2 stocks did exactly what you said. Think about how that impacts and changes everything about your trading. Because then you ignore the 5 that don't follow through. You trade the heck out of the 2 that did. Who cares about the other 5? 2 did exactly what you game planned to happen. That's how you make money. That's how you wake up every day, pour your coffee, and I'm only on my first cup. I get psyched like this every day. I'm only on my first cup. This is how you wake up every day expecting to make money. Don't whine to me that 5 out of 7 didn't do anything you expected. Losers who don't ever get profitable focus on the 5 that don't follow through. Winners focus on the 2 that did exactly. Think about this right now. If you go into the day saying, I expect this to happen, and you game plan it, and 2 stocks do exactly what you expected, you bet your bottom dollar you're going to see your account go like this. Now, you have to learn how to do this over time and whatnot. There's, you have to understand how to set the game plan, what the right position sizing is, what's going on in the market, that kind of stuff. But think about how this changes everything for you. You are no longer, remember we talked about just a couple of minutes ago about how a lot of people are afraid to trade the open? It's scary, it's fast, it moves, blah, blah, blah. Bull. We just said we're going to script it. No matter how fast the market opens, if 2 stocks out of 7, if 4 stocks out of 15, doesn't matter. If they do exactly what you expect them to do, you should be jumping out of your seat excited because you're like, oh my God, this is exactly what I was looking for, and leave the others alone. Don't even look at them because they're not doing what you expected. Dive in there and look to see if the high or the low is made first, depending if you're buying. Think about this as well. Let's say you bought a stock, and let's use Penn as an example. You bought a stock and you've been long Penn for the last 5 days. Let's say Penn opens here, and we could all actually watch this together, opens here and pushes higher off the open and starts to roll over. So now if you happen to be long as a buyer of Penn over the last 5 days or 7 days, whatever it happens to be, and you see it open and push higher, and the first push off the open was higher after the stock went up for 6 days, you're like, okay, that's probably profit taking, so I need to move up my trailing stop. So now we're working both sides of the trade, looking for new trades to enter and looking for that exact price action on the open, and then looking at existing trades that you hold as swing trades and looking for certain price action. So let's take this one last step before I have to hop off the call and go into my private meeting. Let's say, for argument's sake, that you are long a stock, you bought the stock, you've owned it, and it's up 2 days in a row. And you're like, oh, wow, Pete said that, the third day should be a day where we're going to see some selling coming into the market. But that's, we said, if it opens here and pushes higher, what if the stock is up 1 day, up 2 days, the third day it opens here and pushes lower? What does that tell you? Strong stock opening lower is a buying opportunity. So if you have a strong stock that pushed up for 2 days, you're not in it yet, and it opens lower. Now we're looking for that to make the low of the day first. Then we look for confirmation signals, as I explained a couple of minutes ago, and then that's still a buying opportunity. So that's how you avoid short selling or getting out of a stock too soon if it happens to continue to run to the upside. So you have the setup, and then you have the push off the open. You have the game plan, and then you just go into the next day saying, okay, here's my list. I know what I'm doing as soon as the market opens. You completely eviscerate any fear of trading the open because you know exactly what you're looking for. If you see it, you trade the heck out of it. If you don't see it, we have another cup of coffee. So anyway, I have to head out. We have to head into our private meeting. I just want to thank everybody for being here with me today. So again, the chat will be here. You can always go back and watch it. I just would like to ask for a favor. If we have been providing value to you on these videos, I'd really appreciate it if you can click down and subscribe, hit the alert button, smash that like button. But just as importantly, two things. Number one is leave a comment. Let me know if these videos are helping you. Let me know what your biggest challenges are because we can address those in future videos. And look, obviously I'm heading over into my other call, the private call with our private community. If you want to learn about that, what you get over the first 30 days, it's not a subscription. It's basically a 30-day live event like this every day. But you get my entries and exits and all that kind of stuff. I'm not selling you. I'm just asking you to click down and learn about it. Click the link below. And if you're excited about that and you want to take this further, awesome. If not, we can stay here on social media and have this have these types of conversations every day. But just so you know, I do save the entries and exits and the trade management, all that kind of stuff for our private community because those members invested in themselves and being a part of that community. So look, I just want to thank you so much. From the bottom of my heart, I'm very grateful that you've joined me here today. I'm very grateful that you've been with me. This is kind of fun to do these live. I have to admit, it's I get all fired up. So thank you so much for joining me. If you have any questions, leave them in the comments below. Click down and hit that subscribe button. Make sure you hit the alert too so you get updates when the new live streams and new content comes out. Have an awesome, awesome day. The link is in the description below. You'll see it. I think it says bootcamp info or something along those lines. It's in the description and it's in the top comment. So have an awesome day, everybody. I have to head over to the other meeting. I'll speak to you soon. Thank you again.